Okay. So remember the subject is advanced management accounting. Yeah. It's paper number 16, S3. All right. So I'll read through the topic that I would want to do today because I've already gone through this course outline. I'll not like repeat reading the whole of it. No. So advanced management accounting. Now, first of all, before I start, ladies and gentlemen, when these words, when this subject called management accounting is spoken before you, wherever you are, what comes to your mind? Yeah, thanks, Sahin. I'll be able to comment. That must be a mistake from these guys, because you can see it is revised in 2024. Now it's a compulsory paper. It's a compulsory paper. The content there is still good. So then can somebody in this case here define for us management accounting? Yeah, cost management, yes. Cost management, very good. Yeah, cost management is part of management accounting, very good. I like what Ram is telling me there, that for us to be able to really advise management very well, we know that management, they are not very, very good in terms of monitoring of costs. All right. People will come and sit down. They say that, hey, we want to pay ourselves salaries or rather board meeting allowances like this. All right. But now when we have a management accountant being involved, this management accountant will be able to do costing of everything. It could be product costing, service costing. And then, of course, he'll be able to pass this information to the managers. Now the managers will be able to load on these costs, profitability, and then there are certain selling prices. Yeah, one of those biggest roles that we have of a management accountant is cost ascertainment and management. Cost information for managerial decisions. Thank you very much, Javan. Cost information for managerial decisions. Ladies and gentlemen, whenever we talk of a management accountant, yes, I agree with you 100%. But the first thing that you should always be thinking about whenever they talk of MA, management accountant, his biggest role is to advise the board. This is the person who is charged with the responsibility of coming up with schedules. These schedules are the ones that managers will be using to base their decisions on. Assuming that we are looking at an organization like EABL. I like using EABL as an example quite a lot. Not that I promote their products, no. I'll be telling you why I use their information quite a lot. Now, ladies and gentlemen, EABL, of course, we know what they do. They make alcohol. There is no way this alcohol will be able to find its way to consumers without packaging. So packaging must be there. What do they use for packaging? Mostly, they use bottles. Many times you have seen what is happening with EABL and the Central Glass Industries, many times. All right? So then EABL must always keep on asking itself, manufacturing of bottles is not their main duty. Bottles are never the main products of Breweries Limited, no. Even from the word, their work is to brew. They are known for brewing. So in this case, here, manufacturing of bottles, then automatically, just like, for example, offering of security services, manufacturing of bottles is a secondary duty. So then that would mean that management accountants will come in and advise EABL accordingly, especially for these secondary functionalities. So they have to ask ourselves, are we better off making these bottles internally, or are we better off in this case here doing what here? Outsourcing. So a management accountant must always have many alternatives of doing the same thing. It is the costing of these alternatives that makes management accounting very interesting. So then somebody will come and do this evaluation. If we make these bottles internally, we as breweries, how much will it be, or rather how much in terms of cost will these bottle manufacturing internally cost us. All right. So the management accountant will come and look at if we are producing these products internally. In terms of, for example, labor, we need labor. How much will each bottle, in this case here, cost us in terms of labor? The management accountant will be able to absorb the labor, maybe 50 shillings per bottle. We need glass. So these glass materials are how much? Maybe 30. So 30 plus 50, that's 80. Now, we can't make these bottles without, rooms. We need manufacturing rooms, production rooms. So these production rooms, even if these rooms are ours, we must charge what we call assumed rent, notional rent. You know, there's an opportunity cost. If we decide to use these rooms internally, if, for example, we never used them, perhaps we would have leased them out. So we shall be talking of notional rent. So we add rent and other overheads. Whenever we talk of overheads, ladies and gentlemen, please listen and listen to me very well. Overheads, I'm typing here. Overheads are common expenses. These are common expenses that we incur for the benefit of what here? Incurred, for the benefit of many units here, of many units or what here, or products here, or products. Don't write this. I'll be able to give you all the notes. Overheads. You see, for example, like now this college, we are paying for the Zoom license. We are paying for this Zoom license. How much do we pay? We have just introduced Valentine. We pay about 10,000 for one Zoom license. Now, this 10,000, I can't say that this 10,000 is only for Carol and Kivuva. So it's not a direct cost. This 10,000 is for the benefit of all of us, Mwalimu and yourselves. So then this is a very good example of what here? An overhead, overall, covering all of us, overhead. All right. So these overheads must always be done, what here must always be absorbed into what we call cost units. So you're saying whenever you are evaluating manufacturing, whenever you're evaluating this manufacturing, what shall we be doing, my good friends here? So whenever we are evaluating this manufacturing cost, we shall be looking at material cost. We have in this case here plus labor. We have labor. We have in this case here plus what here? Plus overheads, like this, plus overheads like that. So manufacturing cost equals material cost plus labor plus overheads. Now, assuming the manufacturing cost, ladies and gentlemen, turns out to be how much here? Turns out to be 110. One bottle costs us 110. And then, ladies and gentlemen, we consider the other option. The other option, in this case here, is to outsource. So we outsource. So outsourcing means what? That we look for these companies that are known for producing glass, like for example, Central Glass Industries. And then they give us a quote. Yeah, they tell us for us to be able to deliver this bottle to your doorstep, we shall charge you 85 shillings. So now we are comparing two things here. Manufacturing ourselves 110. Outsourcing 85. Then what do you think in this case will be the best decision? What do you think will be the best decision? 85, yes. Because we are in this world to do what? To minimize cost. We're in this world to minimize cost. Yeah, Elizabeth, we are just introducing the whole subject. We haven't really settled on a topic, not yet. All right. Yeah. So we are looking at various alternatives. How do we deliver this thing? So you look at the time implications and many other things, and then you discover, the cheaper option is what we would always go for, so long as quality is guaranteed. So then what is this management accounting as a subject? So whenever we look at management accounting, we are looking at accounting for managers. We are employed by management to give them information that can help an organization to create value in the long term. Value creation in the long term means what here? Wealth. Maximizing on what here? Maximizing on profitability. Now, like today, I advertised for a cost accountant job. Yeah, I just went to my Facebook. We run one of the biggest Facebook pages in Kenya called Accountants in Kenya. Then I said, in this case, I want a cost accountant. All right. You know, cost accountants, management accountants normally are premium accountants. All right. And I got so many applications. And I started looking at these applications here. I started looking at these applications here. I was looking at these applications one at a time, the CVs. And I realized that we have got very many cost accountants here. I never thought of that. Somebody was telling me that I've been a cost accountant at these, for example, Sarova hotels. And when you look at their CVs, it's rich that they're able to cost food. All right. And then, of course, they have been doing quite a lot to ensure that there is minimal wastage. To ensure that at the end of the day, when we cost, if it's Sarova, for example, they sell their food averagely a plate through their buffet system, a plate will be costing you like 4,000. You as a consumer. But now, according to Sarova, then, it means that each plate should be costing them like 1,500. All right. So that is why every organization should have a management accountant. I know of businesses that they think they are serious businesses, and yet they are not even a business at all. Reason being, you get in this case here, people, for example, they say that we are making and selling chairs. So they start making chairs. When it comes to this point of selling, they ask themselves, how much are competitors selling? That if competitors are selling each chair at 1,000, they even sell at 900. There is no problem. You can charge what we call a market penetration fees. A market penetration price. You say, I'm going to charge 900 to simply penetrate. And then in the future, I will be able to raise the price. But you see, it should be out of what here? A point of knowledge. It will be very, very important for you to, first of all, know how much each chair has cost you. Come and price the timber, the nails you're putting into this. You shall be doing some varnishing. You shall be having, in this case here, some carpenters, all right? And many, many other things, ladies and gentlemen. And many, many other things, ladies and gentlemen. So you must be able to do proper costing, and then you add a profit for you to get an appropriate selling price. You realize that I'm supposed to be selling this thing at 1,200. Fine. Of course, in terms of pricing, I must always consider competitors. Fine. Then I'm going to lower this price even to 900. But this 900 is just for penetration. The moment the consumer starts realizing that I'm offering a high quality product, then within no time, like 3 months, 4 months, I should be able to start raising this figure. Ladies and gentlemen, what I'm saying is that a management accountant is at the center of these operations here. He is a major cog. Is a major cog of this wheel here, because a management accountant is always looking at longevity, is always looking at longevity of the organization, is looking at strategic direction. Where do you want to go strategically? Is looking at creating long-term wealth. Very good. Thank you very much. You've come through in terms of these discussions very nicely. But I would want a good student here to differentiate between management accountant or management accounting and the financial accounting. What is the difference? Don't write. I'll be able to give you all this. The very best thing you can do is just to participate. What is the major differences? What are the major differences between financial accounting and the management accounting? Yeah, you can use any search engine. You can use, in this case here, your own language or any search engine to advise, including in this case here, ChatGPT. It's something. Ram is telling me that financial is statutory liability, because financial accounting, income statement, balance sheet, those are required by KRA. Those ones are a must. Financial accounting is historical. Management accounting is both historical, present, and futuristic. Because of the future, FA is historical, while MA deals with you know, also, Audrey, MA is not only about future, about budgeting, no. MA, we have to appraise the current situation. Yeah. MA is used by managers. MA is used internally. FA, in this case, ladies and gentlemen, financial accounting information is for all the stakeholders, KRA. You'll see in this case here, companies publishing their financial statements on the dailies. Great work there. Great work there. Yeah, management accounting uses accounting information. Yeah, we borrow quite a lot. Because if you tell me to come up with forecasts, I'll be able to ask you for example, the most current financial statements. Yeah, FA statements are quite standard because of the IFRSs, the format. You can't get an income statement where you're starting with cost up there. Income statement must always start with what year, revenue, and then you have like that. Whereas in this case, ladies and gentlemen, MA is about what year? Ours is all about what you agree with the managers. We don't have like, our format is never cast on stone. No. Yeah, like FA scope is wider. MA is narrower because we are basically addressing one stakeholder here, who is the management. I love all these. The only thing, ladies and gentlemen, in this case, you're telling me, or rather you're putting it, but not in a very, very good way. You see, FA, you've told me, is very, very historical. Yeah, MA in most cases has got a future orientation. So management accounting information is normally tied with the strategic direction of a company. It's normally tied with the strategic direction of a company. That is why we talk about what here? Long-termism. Because of the forecasts, etc. The other thing I'm not hearing you telling me, you see, financial accounting is basically quantitative model. It looks at just money. But let me ask you guys a question, honestly speaking. In life, for those of you who are married, people like ourselves here, in life, is money everything? Does money in this case, is money the most important thing in this life? No. That is why even when we are choosing our spouses, fine, you can have the money aspect of it, but that should be really a tiny fraction of the whole. You must always also come and look at what we call qualitative factors. This man may not be having a lot of money, but this guy is saved. Our girls in the house, do you still consider salvation as a key thing whenever it comes to marriage? Please be honest with us. You know, salvation is not something that you can touch. It's non-financial, but very, very important. I mean, our girls are saying no. Money answered everything. We shall overcome, okay? We shall overcome. But now, salvation is subjective. I like that. It's very subjective. I like that. But let me ask you another question. Assuming now this man is moneyed, is a money bag, Mr. Moneybag, very rich man. So, of course, in this case, then that means that he will be riding on a very, very good, in a very, very good Mercedes-Benz. But the same gentleman is coming every day at night at 2 a.m. My darling wife, give me food, and you must always start cooking that food from scratch at 2 a.m. because he doesn't eat leftovers. So if it's ugali, you start making that ugali at 2 a.m. And remember, the modern wife is going to work. So by the time she's finishing to cook for this money bag man, it's around 4 a.m. Yeah, yeah, great. And that is why, ladies and gentlemen, I love management accounting, because management accounting captures both financial and non-financial information. Very, very important. Management accounting uses financial, uses financial, uses financial, uses financial, and non-financial, and non-financial information. Uses financial and non-financial information. It's like you're working for this man. Yeah. So it's debatable, especially for the young girls who are not married. It's very debatable. A young girl, and I know of many, who will tell you that I would rather, in this case here, cry in a Mercedes Benz. But somebody who has been in marriage for some time, there are things which are non-financial, but they value them. Things like respect. How do you handle my children? Are you, in this case here, that kind of a very, of course, we don't want you to really be, but you can't be very rough. That once, in this case here, you enter your home, regardless of how rich you are, you enter a home, regardless of how rich a man you are, you just entered into your maisonette like this, and then everybody starts with children. They go up. They go up. Even mama goes up, and then you're left like that. That's a cold home. Yeah, peace of mind. Those things are what here is essential, trust you me. After all, the modern girl is also financially empowered. Yeah, they're not getting into this marriage because of what here, because of just money. So management accounting, ladies and gentlemen, looks at both financial and non-financial. Never forget that. Quantitative and qualitative. Quantitative and qualitative. Let me just write this here. Quantitative, quantitative, and qualitative. And qualitative. Great. Quantitative and qualitative, like that. That's management accounting. Yeah, it is future oriented, strategic oriented. Now, ladies and gentlemen, when we talk of strategy, we are looking at long term. Very good, G. That FA is subject to audit, while MA is not subject to audit. I love that. Very, very good. It seems you guys passed this paper very well. Seems you guys passed this paper very well. This paper called management accounting. Now, so, for us, you can't be asked those kind of questions. I'm only bringing this so that now I can nail down very important concepts that your examiner will always ask you. And these important concepts, they are premised here on your course outline. On your course outline, this is how I normally teach this paper. I will straight away, after I've done that introduction, I will straight away go to very, very important strategic measurement. Because I've told you that management accounting is a strategic management model, management paper. And I would want to lay all my fingers on these three models today. What we call the balance scorecard is a strategic model. Performance pyramid. We have Fitzgerald and Moon building blocks model. Yeah, because MA is all about telling us that if it's RCM, in the future, where would we want to be? The moment we have got very experienced management accountants on the table, then we shall be able to create enough wealth to make us a university, say, in the next 5 or 10 years. The mistake, and I normally tell people here, the mistake that most businesses do is to disregard accountants. Yeah, people don't take accountants very, very seriously. So you get most businesses, 80% of businesses, like where you guys are working, I know the kind of work that you do. Most directors can't even give you bank statements. And when they employ you, they don't even pay you very well. But the moment you make accountants your friends, and then they teach you what we call sustainability, that let's in this case, you have a farm that is paying taxes very well, everything. If a farm is sustainable, it should be able to carry clerical work, yes. That's what most of you are doing, which is very, very unfortunate because most companies don't really appreciate. And that is why if you ask me, I'm normally very happy nowadays when I get most of my customers nowadays are getting visitors from KRA. If KRA was to tighten their bolts a little bit and inquire into the dealings of these organizations outside here, then they shall be able to trust accountants. At the moment, in this case here, our role is highly demanded. Then we shall start in this case here getting what you're I'm looking forward to that time. Like I ran a firm by the name Aura and Co, certified public accountants. It's an audit firm. It's a taxation firm. I'm looking forward to that day when I'll be reporting to that office of mine. And then just like doctors, medical doctors, I'm looking forward to that day when I'll be getting like 30 people queuing, waiting to see this tax consultant. It's going to be in the next 1 or 2 years. It's going to be like that. All right. And that can only come in if our government, through KRA, they do something. If they do something and they become ethical, number one, they become very transparent themselves, then the role of the accountant will be so up there. Yeah. So but you can see one person here is saying, fortunately, I'm paid well. You must be very lucky. You must be very lucky, Joy. Yeah. To comply with taxes, yes. Yes. So then please allow me to show you something here. Very, very important. And you're not writing any notes because I'll be able to give you all the notes. I'll be able to give you all the notes. Yeah, just a minute. There's something I'm getting here. And then everything will be okay. Yeah. So is there anybody who has ever been to Egypt? Anybody who has ever been to this pyramids country, or anybody who has ever seen a pyramid physically? Physically? No, not at all. Okay, no problem. Now, some of those pyramids you normally see, you can see them even on YouTube nowadays. I mean, there's so many ways of seeing these things. You can teleport. Yeah, you move through these systems and you get to see them live. Some of those pyramids were built long, long time ago. And I mean, like the greatest of them all, pyramids here, is very strong. We are told in this case here that, I mean, even the current scientists, they can't tell you the kind of cement that was used while building those particular what, because it's quite a unique kind of cement here that you can't just go with anything and then you start demolishing, right? Very, very, very strong. Ladies and gentlemen, we are also called upon to ensure that we put up our organizations in that kind of a pyramid structure. If you'd want your farm strategically in terms of these longevity rules to be there in the future, to outlive you, like most of these Indians do. You know, you'll go to River Road, Kirinyaga Road, and you'll get a business which is over 200 years old. All right. Ourselves, in this case here, Kenyans, ladies and gentlemen, we are not very, very good at building up business empires that outlive us. If they outlive you, your children will finish it. It will be very hard for you to get a business run by a Kenyan, which can go up to the great grandchildren. Very, very hard. But I mean, we have an opportunity before us. If we look at sustainability, we have an opportunity before us. Ladies and gentlemen, please listen. This performance pyramid is something that I would want you to always be thinking about. Yeah, I hope you are able to see the pyramid. This is how it looks like. Yeah, yeah. So it has got these levels, 4 of them, and we shall start from down here. That there are things that you must get right. There are things that you must get right. Under level 4 here, you can see if you want to get it right, you must ensure that you deliver high quality goods down there. The delivery should be on time. When you say you are going to deliver, like if it's an online business, somebody has made payments and you've told them that you will be able to deliver, say in 30 minutes, please ensure that you keep to your word. Then we have what we are calling the cycle time. Cycle time is a turnaround time. If it's a carpentry workshop, the time you take, ladies and gentlemen, from when you start, in this case, you're building up your timber, conversion, etc. I mean, painting work, etc. That cycle production time should always be minimized. Great companies like Toyota Japan, now they are able in every minute, Toyota Japan is able to have a vehicle produced. And if you read their information online, because they're using these famous models like just in time, the JIT, they're using models like Kaizen, all right? I mean, they started a long time ago. It used to take them quite a long time to build one vehicle. But nowadays, in this case, it's just, remember, it's a demand-based. How many vehicles have been demanded in Kenya? This number of vehicles. Can we produce them in a day? They produce. So that cycle time must always go down if you want really to have a very strong base for your business. Wastage should always be minimized. Wastage should always be minimized. We go to level 3. So level 3, my friends, this quality, the quality and the delivery, if you do them very well, high quality, you are delivering high quality and you are delivering this within the stipulated time, then your customers will be satisfied. Ladies and gentlemen, if you look at delivery and cycle time, you are minimizing your delivery time, you are minimizing your cycle time, all right? Then the outside here, the stakeholders will consider you to be very, very flexible. That this is an agile organization. This is an agile organization. You ask them whether they have got this thing and they can deliver as fast as possible. They tell you, yes, we are on top of things. Ladies and gentlemen, when you keep on reducing your cycle time, these two, cycle time and the wastage here, yeah, you're reducing cycle time, you're reducing the wastage, then your productivity automatically will go up. Because cycle time and wastage, they're feeding the productivity angle. Now, ladies and gentlemen, when you look at this customer satisfaction, your customers are satisfied, and then of course you are very, very flexible, the market will really love you. Your product's demand will go up. Yeah, and I gave you this, I can't remember whether it was this class. You know, these ladies, whenever they are going to do some great weddings, yeah, they will get, for example, their wedding attires very, very early in advance. If, for example, these ladies are going to do their wedding, say in June 2025, by this January, they'll be able to import their wedding gowns from Dubai. And trust you me, it's like every day they must fit in. They get, in this case here, from their workplaces. They'll be able to do 1, 2, 3 things they eat. After that, before they see the blankets of their beds, they must try that attire. And they start watching their weight quite a lot. And then they'll call, in this case here, 1 or 2 people. Am I smart? How will I look like on this big day of mine? So they keep on doing that, like that. Then we have, ladies and gentlemen, like 3 days to this particular big day. This is the day she has come from office on Saturday. All right. Now she has taken even much longer with this attire. As she's trying to do some catwalk in the house, a little bit under there, some kid from nowhere comes with a cup of uji and splashes on this white, great wedding attire. That is the time when you look at the kid, you don't even know what to do with the kid. Because even, I mean, fighting this kid may not be enough. So even you just leave this kid. And then now you take this particular attire of yours to a laundry shop in town. Dobby shop in town. So when you go to this Dobby shop, you see Dobby shops, they have their own policies. Some people will tell you, hey, when you bring this attire here, expect us to clean it and give it back to you at least within 7 days. You must give us 7 days. So do I push my wedding day that has been advertised, re-advertised, or do I push it? And remember, that is the time for those of you who have ever done any wedding or if you have been involved. That is the time you can't convince this lady to even think about another attire because they are so much fixated on this one that came from Dubai. So she's walking in this case here with her attire, trying to get a laundry shop in town that can help her. And she comes in this case here to this laundry shop. All right. So this great laundry shop tells this lady, yeah, we have this 7 days policy. But because we would want you to be happy on your wedding day, we are going to be agile. We are going to be flexible. So instead of washing this, taking 7 days to wash this attire, we shall wash it actually today, within 3 hours. Express service. But because of the express service, as we charge others 3,000, we are going to charge you 20,000 to clean it within 3 hours. What do you think of this great lady who is going to wear? Do you think she has options? She will be very happy even with that 20,000. Paying that 20,000 and she gets her attire cleaned within 3 hours as she waits outside there. Now, at the end of the day, because of this kind of flexibility, trust you me, when this lady does this wedding, after the wedding is over, amongst the things that she can never forget in her life is how you saved her. This laundry shop that was able to do this miracle in 3 hours. Customer satisfaction, flexibility, agility, being able to bend, to accommodate customers. You can never go wrong. Your market will expand. Your market will expand. It's called the performance pyramid. You simply climb, checking those, ticking those boxes one at a time, and you'll be able to see very, very far as an organization. So the moment in this case, then you have this level 3 staff, right? And the market is in love with you. What else do you expect as an organization? To start having your financials right. Your revenues will increase. You'll become more competitive. And it's only when your market is right and your financials are right that you shall be able to see your corporate vision. This is how a very, very small farm is built to really, really become a mighty company all over. These are some of the things that some of our companies, even locally here like Safaricom, are going through to ensure that they are able to achieve their strategy. Corporate vision is strategy achievement. And this is what the management accountant does. I'll be giving you these notes, ladies and gentlemen. But before I give them to you, if somebody tells you to describe what a performance pyramid is, what are those key stones, stepping stones? What are those key activities of the performance pyramid you will never ever forget if you're told to describe this in 5 marks? I don't have to arrange them the way they are arranged. They're those ones that I know. I have to get my quality right. My cycle time must keep on reducing. There are things that I will always remember. I won't be wasteful. Yeah, great. I can see comments here. I can see comments here. Yeah, I mean, I have to endeavor, do everything to ensure that customers are satisfied. So as is, this is very good, but ensure that corporate vision, that one never forget. Corporate vision should be the last one. Yeah, quality delivery, turnaround time. Thank you very much. Wastage. Thank you very much. Productivity. Okay. Yeah. Market dynamics, where we become the market leader, where we become the market leader. Yeah, deliver things on time. Yeah, you must get your financials all right. Munira, customer satisfaction, flexibility, productivity, customer satisfaction. Thank you so much for your participation. Now let me ask you a question. Have you ever had, or rather, is there somebody who has ever been to Mombasa? Yeah, is there somebody who has ever seen the Indian Ocean live like this? Great, thank you very much. Now, we have in this case here quite near the shore here. Near the shore here, you'll get very dirty water. People are really, somewhere I can see, but you're in Mombasa, Keri, yes, in Mombasa. So along, karibu na bahari hapa, yeah, utapata hapo kuna maji chafu, all right? So many bad things happen around there. So that is the section of the ocean we call the red section. And then after those coral reef line, the deep seas now, where you are able to see when you look afar, when you look in this case here, yonder, the other side of the ocean now, all right? You are able, ladies and gentlemen, to see some kind of bluish thing, right? Deep oceans. We call that one blue ocean, the blue section of the ocean. Most companies will tend to, be very near the shore here, where things are dirty, where competition is intense, where competitors are even killing each other. But great companies will always strive to get into the depths of water. What we call the blue ocean strategy. Blue ocean strategy. What we call the blue ocean strategy. What we call the blue ocean strategy, like that. Blue ocean strategy, like that. If you use this performance pyramid very well, this will really take you right to the depths of the ocean. In the blue ocean, there is no competition. There you are alone. In the blue ocean, you'll not be able to get killed. Ladies and gentlemen, competition can be very bad. I'm so sure most of you are very young, all right? You don't understand, or rather, you've never seen how these big companies can fight between themselves. Like I remember some time back, we had the war between Coca-Cola and Kuguru Foods. So Kuguru Foods, they made some kind of very sweet sodas. Is there somebody who can be remembering? Is there somebody who is like 30, 35 years who met this Kuguru? Yeah. Babito, was they Babito or something? Softer. Softer, yes. And for sure, that thing was really, really soft. So then Coke looked at this. Of course, they will not accept, but they looked at this thing, which was the demand for softer was very high, and they were very, what, yeah, cheap. That Kuguru person will take his softers to Umoja. Within the same day, the sodas are over. Children loved softer. So then Coke now looked at, if you can't defeat them, what do? Join them. So what did Coke do? They went ahead and bought all Kuguru sodas, all of them. You take to this market, they're going to become your best customer. They bought all of them. So Kuguru, without knowing, he never had a single stock of bottles. And you see, bottles are expensive. So they were buying and taking the bottles. buying and taking the bottles, buying and taking the bottles like that. Up to date, if you ask Guru Foods to enter into that kind of a business, it'll tell you never, ever. He can only package his whatever that he's doing today with plastic bottles. Yeah. So they bought all the bottles, yes. They bought all the bottles. Yeah. Look at, for example, Coke versus EABL. EABL wanted to enter the soft drinks market, and they produced this. How comes Alvaro? They produced Alvaro. Okay, great, Elizabeth. Great, great. So they produced Alvaro, yes. But you see, Coke is multinational. It has a bigger financial muscle. So what in this case here, Coca-Cola did, ladies and gentlemen, Coke realized that Alvaro's demand was really going up. So they just got some people who gave them the formula of producing Alvaro, and they used that formula to produce which product? To produce which product, somebody? Novida. And once in this case here, they produced Novida. Once they produced Novida, what happened to the market of Alvaro? What happened to the market of Alvaro? Is anybody who takes Alvaro even today really? Declined. It collapsed. It collapsed. Yeah, today the threat that Coca has is Pepsi. And you see also Pepsi's American Pepsi is also big. They're really trying to penetrate the market here. All right. All right. But if you ask me again, for Pepsi, it's a Johnny who is walking in too late in this African market, in this African market. Great. Okay. Great. Great. No worries, Elizabeth. We shall overcome. We shall overcome. We shall overcome. We shall overcome. So, ladies and gentlemen, if you would want to reach, these multinational companies are really very good in this performance pyramid. They are very, very good in this performance pyramid. What they are able to see when they are seated down, most of these Kenyan farms cannot see when they are on top of a tree. Those wazungus, if you work with them, the kind of structures they put down, those wazungus, I mean, truth be told, those guys are workers and they're very strategic. And this is something I would want to sell to you as great growing now management accountants. You must always know these things. You must always know them. Is there anybody who has a question regarding the performance pyramid? Performance pyramid. Yeah, it came to African markets in this case here recently. Let's see, but already Coke, you know, if for example you have like a 2-year-old son or daughter, when they ask you to bring drinks, among the drinks they'll ask you to buy them is Coke, soda. Already this thing has sunk into so many people's water souls. Or you work with it. Ah, okay. So then this is very, very interesting. I have students working for Pepsi here. I have students in this case here working for water for Coke. Very, very interesting. We shall be able to learn. Yeah, I'll be able to show you from your past papers. This comes. That's why I'm taking time to explain to you in a very, very practical way, in a very, very practical way, so that you cannot forget them. So this can come in your exams. The can packages, EABL can penetrate in the market strategically by improvising the can packages. So perhaps Samuel, if you would want to explain this better, I can unmute you and then you talk to us. I always learn from my students. I always learn from my students. All right. Ladies and gentlemen, if you give me 1 minute again, I'll be able to pull through another model called Fitzgerald. Ah, this is the best. Fitzgerald and Moon building blocks. I'll give you these notes, so you should not be worried. Just listen and listen carefully. Listen and listen carefully. Now, this is quite an old model, which was developed in the 90s, very, very old, but really applicable. Applicable quite a lot. Applicable quite a lot. It can't expand more than that. So, but I hope you'll be able to see here. The building block model was proposed by Fitzgerald and Moon in 1996 and focused on the performance measurement in service businesses. Their building blocks cover dimensions, relevant aspects of the business to set, measure for standards, what characteristics the system should have, and rewards benefits of adopting the structured processes. Ladies and gentlemen, please listen. This Fitzgerald and Moon model, they say that, hey, customers can never be the king. Customers can never be the king. I'll be able to demonstrate it. Customers can never be the king. They can never be the king. That who are the kings in these businesses? It is employees. According to Fitzgerald and Moon, they said employees are the kings. Treat them right, and they shall be able to treat your customers like queens. They shall be able to treat your customers right. So then they went ahead to lay down some literature that I really love going through. All right. That the moment you respect your workers a lot, then you're going to have your profitability going up. Your competitiveness will go up. Your market share will go up. Just treat your employees right. Hapana treat employees kama matakataka. Please listen. They say it. These employees are not toddlers. Sit down with them and set standards. Set standards. Set targets with them. And you can see, there are 3 blocks. We have this, number 1, number 2, number 3. So the first block here is talking about standards. That let these employees own the standards. Let them own the targets that you're putting for them. Ensure that those standards, those targets are achievable. And ensure that they are fair. 3 attributes that I'll be able to give you notes and you'll be able to understand them even better. Ladies and gentlemen, please listen. The first thing that you need to do in terms of ensuring that you respect your employees. Don't come from nowhere and then say you must produce 80 bottles of water every day. I mean, how? Yes, you're a director, but you can't even produce 2, and yet you want them to produce 80. Sit down with them. Tell them that you have been in this business for some time, and I normally see you guys producing, say, like 20. Tell them that now for bonuses and whatever, let's produce 30. And then you hear from them. They'll say, hey, 30, no, but 25, yes. Then in this case, you involve them in discussions. Whatever number you agree on, those guys will be very, very happy. They will feel like they own the process. They own the targets you've set for them. So ownership is all about bottom up. Bottom up. Involve these guys down there, and then they give you their, suggestions like that. And ensure that that target you're putting, ladies and gentlemen, is achievable to any above average employee. Don't set targets that year 1, year 2, year 3, nobody, even a single person, is achieving. No. Anybody who is above average should be able to do what year, should be able to, ladies and gentlemen, meet the targets. And those targets should be very, very fair. Please listen. Assuming in this case here we have a company of men and women, we are producing bricks. So if I say that, for example, I give a man a target of 50, should I also give a woman a target of 50? Let me use the word a lady. Should I give these ladies also the same target of 50? Or would you be the kind of people who tell me that whatever a man can do, a woman will do it better? No. 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 Targets should be set circumstantially. What are the circumstances? What are the circumstances? If, for example, you have a hotel in Nairobi and another hotel in Kisii branch, a branch in Kisii, you can't expect the two restaurants, the two hotels in this case here to compete equally. No. No. You must look at the circumstances. 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 So fairness has to be there. That is the first brick. And if you get these right, you can never go wrong. I normally do a lot of management consultancies. And when I get into an organization, at times I will always start, not at times, but I will always start by collecting feedback from the employees. How are your managers? Do they listen to you? Do they act on your feedback? Over 90% of the employees will tell me, no, our managers don't listen. Ladies and gentlemen, I tell you, because I know most of you will be running your own businesses. I tell you today, never look down on your employees. Those guys are not stupid. The fact that some of them are just there to wash, like, for example, ablution blocks, the washrooms, don't look down on those guys. Some of those guys have got degrees. Even if they don't have degrees, like as in a physical paper, their experience is huge. And most of them are the ones in this case that have stayed in those companies for a very long time. They know exactly those areas that you need to touch, you as a CEO, and then you see this particular company going up. Involve them. We call it involvement through quality circles. Have like fortnightly where you simply sit down to talk about our business. And you should never, the problem, ladies and gentlemen, with most managers currently that we have, our ego like this. We have big egos. Ego like this. Very big egos. Yeah. That if you get somebody trying to criticize you a little bit, telling you that, you know what, we are doing a few wrong things and you hate those people forever. No. But you would want just somebody who speaks to your ego. Yeah. No one is at the center of knowledge. You can't know everything. You can't know everything. All right. So involve these people whenever it comes to this standards block. There are 3 blocks under Fitzgerald and Moon. It's called Fitzgerald. From your syllabus, let me just show you your syllabus here. So from your syllabus, ladies and gentlemen, you'll be able to see here, we call this Fitzgerald, this one here. Fitzgerald and Moon building blocks. And there are normally 3 blocks. They are normally how many blocks? 3 blocks. They are normally 3 blocks. And the very first one is where you need to respect your employees. Yeah, centralization is a big issue. We need to decentralize this thing. Decentralize it as much as you can. Involve people. Involve people. Let's involve people. And you'll be surprised. Your work will be very, very easy. Your work will be very easy. Just a minute. All right. And those are the kind of points I would expect you guys to be putting in your exams. In your exams, I would want you to be very, very agile, to be very, very flexible. Don't go to exams when you are cramming things. Those points you are writing there are the points I would want to be seeing on your papers. And then now we go to the second block, what we are calling the rewards. This second block, the rewards. And again, this is where people get it wrong. We started this particular company. I went ahead and registered it. So I became a director. So the company now is growing. The only person where growth is being seen on is the director. The director is the only one who is able to push a V8. But the other employees who we have been able to employ progressively, they walk from Madare area, Madare North, to industrial area. They can't even afford bus fare. Rewards. Rewards. Let's have an organization where everybody is growing. It's possible. Once you have set these standards, as a gentleman, then of course you're going to give now some kind of rewards for targets met. So the rewards should always be clear. Every employee should know. If I make, in this case here, these 50 bricks, if I make this and this, I should be able to get, in this case here, how much? These rewards in this case here should be motivating. You know, like why I stopped teaching, most of these universities have been a Daystar, JQuat. I mean, teaching is very, very good. But again, you come and realize whenever it comes to marking. So you have, for example, 300 scripts. And then these guys are paying, those days they used to pay us 50 shillings, which was not even forthcoming, 50. So you realize that most of those scripts are being marked by lecturers' kids or farm workers, because whatever they're giving lecturers as marking fees, it's not motivational. So the rewards you are giving, ladies and gentlemen, should be able to motivate. And of course, they should be controllable. Let me just share something here. So you can see the second brick. The second brick tells us under rewards, we have got the reward system must be clear. It must be motivating, and it must be what here? Controllable. 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 What do we mean by this concept of what here? What do we mean by this concept of controllability? What do we mean by this concept of controllability? You have given targets. These guys have shown up at work. They came early in the morning, and for some reason which is out of their control, all right, they were not able to produce. So for example, you lacked raw materials. If you lacked raw materials, what do you think in this case here? These guys have come to work. Yeah, they were so determined. They wanted, in this case, to hit their targets. But here you are not able to give them. Then you should go ahead and pay them. You can only punish them if they don't meet targets, all right? And you have given them everything, all right? Let them, in this case here, fail to deliver. And yet you have done what here? You have given them everything that they need. So rewards. So whenever we talk of rewards that you're going to see, you must be able to memorize this one, that the reward system must be clear. It must be able to motivate. Look at, for example, what Nation Center does. You see, Nation Center, the newspapers. Is there anybody who could be knowing the commission, for example, they give to the newspaper vendors on every copy they sell? On every copy they sell, is there anybody who could be knowing? Is there anybody who could be knowing? Eric, I've seen your comment here. Most organizations' reward is very skewed. Yeah, there must be transparency, yes. Because the way those young men and women run on the roads to sell those newspapers, that reward, the amount must be very motivating. Yeah, you'll get, in this case, like most wazees who sell to me the newspapers, they don't tell me like what is the commission, but they'll tell you that I've been able to take 3 children to university, etc., through selling what your newspaper. So whatever you give to them as your reward should always be what here? Should always be motivating. Should always be motivating. Yeah, transparency, same as clarity. Let the system be very, very transparent. Ladies and gentlemen, please listen. You know, for you to have a house standing up very well, you need a very strong foundation. These 2 bricks, the 2 blocks, which are the employees' blocks, Once you get it right, then this other top block, which is now for the company's dimensions, the company's metrics, everything will be all right. There are 6 dimensions. 6 metrics for the company. But once the employees, standards and rewards blocks are okay, the first dimension there is profitability dimension. The profit will be up there. The company will be competitive, number 2. The company will be flexible. These guys will not, they will be agile. They'll not be turning away because now they're motivated. Once these staff are motivated, they now become innovative. They become innovative. They'll be able to utilize resources very, very well. They'll be able to utilize resources very well. Like guys who are in hotels, you tend to underpay your people so much. If you underpay your people so much, like if it's a restaurant or a hotel, they'll always get a way of paying themselves. They are going to eat the premium food. Yeah. They'll always get a way of compensating themselves. Give somebody a salary, like it should be about 35% of your total revenue. 35% of the total revenue should go to employees. Once they start getting good salaries, then they'll tend to be ethical, more ethical. All right. When they realize that, hey, I can feed my family out of this work. Then automatically issues to do with theft will go down. Yeah. So how they utilize resources. They don't even have to be stealing. When they hate you, when your workers, ensure that your workers love you somehow. Of course, not that you become very soft, but ensure that they love you somehow. Yeah. Because somebody can come, for example, if it's a hotel, and then they even decide to put like coils. Yeah, the electrical coils here. They simply, or even gas, they simply light it up and they just let it just to burn, simply to punish you. All right. The ladies in the house who are married, what I'm saying here must be resonating very well with you. If, for example, your housemaid doesn't love you, they do crazy things. You'll be surprised your shopping amount every month goes up. Every month goes up. They can even call the entire community to come and eat in your house every day. All right. So we must get a way of impressing these people. Let them feel that we are one family. Let them feel that we are one family. We are one family. All right. And then, ladies and gentlemen, the last one, in terms of competitiveness, the last one, in terms of dimension, is what we call quality or excellence. What we call quality or what here, excellence. Now, what I've seen, and I'll be able to show you from your past papers, they will, in most cases, ask you about this excellence block. They'll tell you, for example, in Fitzgerald and the Moon building blocks, discuss the dimensions block. So they tell you to discuss the dimensions block. What are those three things that you will never forget as an individual? What are those three things that you will never forget as an individual? Please talk to me. Only three, everybody. Under dimensions. Profit. Don't give me one. Please write the three of them at the same time. Write the three of them at the same time. Write the three of them at the same. No. Under dimension. I'm only focusing on dimension, the topmost block. Dimension. Write three. Three metrics. Excellence, competitiveness, flexibility. Thank you, Munira. Mueni, competitiveness, flexibility, high quality. Profitability, flexibility, competitiveness. Profitability, flexibility, resource utilization, yes. Profit, innovation, flexibility. I think you've spoken about all of them. But now this is how you answer the question. How you answer the question, you will tell them, according to Fitzgerald and Moon, we must motivate our workers. And to motivate our workers, then we must use this bottom-up concept. We must involve these workers whenever we are setting standards. We must ensure that we set standards that are what here achievable. Let us not be very mean. And ensure that in our way of setting standards, those standards are what here, they are fair. And then when they meet those standards, reward them as per the agreement to the latter. Don't be dodgy. Don't be dodgy. Reward them. And the reward, remember reward, ladies and gentlemen, must always be transparent. The reward system must always be very clear. It has to be motivational. And then, of course, the concept of what your controllability, where you don't punish them just in case the mistake is not theirs. Now, once I've been able to speak about those two blocks, I will say once the employees' needs are taken care of, then the organizational dimensional metrics will be achieved. And these are the profits will go up. The company's competitiveness will increase, market share, because every employee will be a fighter. Remember, employees, like where we teach here at RCM, our employees give us lots of referrals. Oh, Winnie is saying that I'm very fast. Sorry, yeah. Winnie, are you writing notes? Are you writing notes? Because we should not write any notes. We should just oh, you're writing. Oh, okay. Ah, okay. Okay, great. Because that system then will be very, very boring. You know, this thing, wants you to really understand, wants you to understand in a way that you can now then, in this case here, do what here? Reproduce the answer in your own way. In your own way. In your own way. Because if you start dictating notes here, then this syllabus can have an issue. And again, remember, you're going to get this video. I mean, when they tell you to answer a question on dimension, most importantly, tell them that take care of your employees and the company will be comfortable. Take care of employees. How? Ensure that you are involving the employees in standard setting and reward them. In standard setting and reward them. Once you do that, then the dimensions, you list them. These dimensions, you list them the way they are. Profit will be achieved. The company will be more competitive. Flexibility will be felt across. We shall be an innovation company. Our resources will be utilized very well. And the quality of our products will do what here will improve. Will improve. Will improve. I like going to hotels and I travel. At times, whenever I want to read very great things, I'll go and check into some good hotel and I just read. And from the word go, once I check into your hotel or restaurant, I'll be able to know whether your workers are taken care of or not. The quality of food. All right. Even the delivery, you order, they'll tell you this is a la carte. A la carte takes like 30 minutes, but they take a whole hour. Then when they bring you things here, they're banned. Very bad things. All right. All right. So, ladies and gentlemen, in your own ways, if somebody in this case here tells you to discuss Fitzgerald and Moon building block, let's discuss it for 10 marks. What will you tell us about this model? In your own way, in your own words. Just type there very fast. In your own words, discuss Fitzgerald and the Moon building blocks in your own way. Yeah, just take your time, like 3 minutes. Everybody should be able to type something. And remember, when you type, it sticks. It sticks. It sticks. Yeah, bottom-up approach. In your own way. Three building blocks, namely, I love that introduction, namely standard, reward, and dimension. Please expound on it a little bit. Very good. Expound on it a little bit. Very good. I also love that concept of involving employees, the bottom-up model. So if we have new students here, please, I would want to welcome all of you to join RCM College. RCM College is the best college in East Africa. Yeah, we charge Kenya shillings 4,800 per paper. And we have a very good mobile number that you need to call, 0719 525 000. The good thing with us is that we are working elsewhere. Most of our teachers, they're really hands-on. They're not full-time teachers. So like Mwalimu has worked for multinational companies. So the exposure that I bring to you is a high-level exposure. And fair reward systems, the dimensions will fall in place. Very good. When an organization has good standards for employees and a fair reward systems, then its dimensions will fall in place. I mean, that is perfect. AMA and AAA, thank you so much. Great. Yeah, thank you so much. You guys have really, really, really understood this. You guys have really, really understood this. Very good. Very good. Very good. Take care of employees by involving them in standard setting, rewarding them fairly to achieve profitability, competitiveness. Although that's very good, but now list all of them. It's not profitability alone. There are 6 metrics. There are 6 metrics. There are 6 metrics. Tomorrow is which day? Yeah, I'm free, but now there is one problem. There's one problem. You guys don't want these classes at 6 p.m. I don't know why. Because me, I'm free tomorrow at 6 p.m. I'm free tomorrow at 6 p.m. Okay, because of traffic. Then which day are you free at night? 8 p.m. Which day are you guys free? None. Okay, I don't want to get into this debate now. I don't want to get into this debate now. So tomorrow we shall not be able to have that class. I don't want to get into this debate now because I'm discussing very serious things now. Okay, Monday and Thursday. By involving them in a standard setting and rewarding them. Reward should be clear and motivational. Ijaka, great. I don't want to get that discussion, ladies and gentlemen. I don't want to get that discussion. Clash, okay. Great, great. We shall overcome. You can see the kind of, ideas that we have. I will need even to pray first before I make a decision. Yeah, I will have to pray first before I make a decision. So please don't talk about that anymore. Don't talk about that anymore. But fortunately, we're also introducing the early morning classes from this weekend, the 5 a.m. classes. So I would expect you guys to do what you do. Some of you to change to the 5 a.m. classes. Yeah, AMA classes 5 a.m. Yeah, for AMA. Yeah, so that you guys can also take advantage of those classes. Okay. Yeah, I can't just change like that. Yeah, Maureen will be able to discuss about the 5 a.m., but it should be, I don't have my timetables here. The days when you don't have AFR, FM. Yeah, great. Thank you very much. Thank you very much. We shall overcome. Great, ladies and gentlemen. I think we have done enough for the day. We don't have to go all the way up to 8. So whatever I've given you is more than enough. So I'll be able to share with you some questions on WhatsApp and the notes and the notes and the notes. All right. Otherwise, it has been a pleasure hosting you today. Thank you so much. Say hi to your great family members. Yeah, I like whenever, like over December, I'm traveling around, I meet a family. And then they tell me, Mwalimu, si mwalimu wa mami. I feel happy because now you're teaching families. We shall overcome, yes. Thank you so much. Bye. Yeah, I'll be able to share. I'll be able to share. Yeah, yeah, yeah. Actually, this is very good because I'm going to give you, it's a booklet. For AMA, we have a booklet that we shall be following. So I'll give you the booklet. Yeah, I'll share the notes. We shall overcome, yes. Thank you.